wage growth we saw in this morning's jobs report. You mentioned in your Jackson Hole speech not being, well, put in your words, how much should we trust estimates of the natural rate of unemployment? How much should we say this is a job market that isn't creating huge inflation yet? Let's let it run and see where this leads.
So we need the concept of the natural rate of unemployment because we need to know whether employment is, we need to have some sense of whether employment is high, low, or just right unemployment. But we have to understand that it's, that there's tremendous uncertainty around the actual location of it. And we are in an era where inflation dynamics are such that the relationship between slack and changes in slack and inflation, changes in inflation, is very weak, but it's still there. It's clearly still there in just about all the research that's been done. So I think we've been willing to revisit our views, very much willing to revisit our views of what the natural rate is, and also our understanding of what it is. So if you look at the forecasts of FOMC participants, we have unemployment remaining below 4% through the entire projection period, and you have inflation remaining right around 2%. So we're not acting on it as though it were some certain number. We're very much, I think we're very open-minded about both what the level of the natural rate is and also what the implications are for inflation. I think it would go too far to just ignore resource constraints completely, because we can get the old inflation dynamics back over time if we want to, where there was a very strong relationship between changes in slack and inflation. But I think that's the way I would think about it.
How about this linkage? Part of the traditional Phillips curve relationship is low unemployment creates a tight labor market, wage pressures, which flows through to broader inflation. There's two steps there. There's tight labor market to higher wages to overall inflation, and that's the linkage we haven't seen as much of lately. How do you think of that?
Both of those links have weakened significantly since we were young, since the 1960s, since I was young anyway, before you were born. So they've weakened a lot, and I've mentioned we had wages going up faster than productivity plus inflation during the latter part of the 1990s expansion without having price inflation. So the link between the two, between wage inflation and price inflation, is pretty weak, and wages going up is not necessarily inflationary, and we know that very well. I mean, I think we have inflation under 4%. Sorry, unemployment under 4% for 9 months now. We have inflation under control, and I think that's a pretty good outcome, and we sure think it can continue.